Back in the studio after a month of skiing and snowboarding out west. Thanks for your patience as I suffered through the worst Wi-Fi situation I've ever endured. It totally destroyed the 10K to Tesla Roadster Challenge for February, so we're going to hit it this week, and I think March will present much better opportunities to multiply the funds quickly. Hello, I'm Crypto Casey, and welcome to another episode of Last Week Crypto. Every Sunday, we review the performance of the largest cryptocurrencies, top gainers, as well as the latest global news stories affecting the crypto markets this past week. This week, we will discuss how the government is totally disillusioned about how finance and economics work, the $1.9 trillion crypto advertisement the Senate just published, why Bitcoin and Ethereum are poised to explode in the coming weeks, and finally, how NFTs, or non-fungible tokens, are absolutely mooning. To check out the links to all of the articles we discuss, go to cryptocasey.com/lastweekcrypto. This week's episode is brought to you by Crypto.com, an exchange with over 55 different cryptocurrencies. On Crypto.com's mobile app, you can buy crypto with bank transfers, credit, debit cards, or crypto at true cost with no markups. Crypto.com also has a desktop exchange that is solely for crypto-to-crypto trading, which isn't available in the US quite yet. If you use the link below to sign up for Crypto.com, you'll receive $25 worth of cryptocurrency for free when you use the referral code CryptoCasey, all while supporting the channel. Also, every Wednesday I conduct a weekly AMA or Ask Me Anything at Instagram.com/CryptoCasey. So use the link to my one and only official Instagram account listed in the description area to follow me and ask me anything you want every Wednesday. Awesome. Last week crypto, go. Looking at the top cryptocurrencies by market cap, Bitcoin up 4.3%, ETH up 11.8%, Cardano down 11.3%, and Binance Coin up 1.3%. Looking at the top gainers this week, Chili's up 127.3%, Engine up 95%, Flow up 70.6%, and Banker up 65.5%. Overall, pretty sideways price consolidation in the crypto markets this week. So are we going to break upwards or downwards? And what will cause it? Well, as we all know, the crypto market still reacts a bit to the traditional stock market movements. This week, the Dow falls more than 300 points as Powell fails to ease rate fears. NASDAQ goes negative on the year. U.S. stocks fell sharply on Thursday after Federal Reserve Chair Jerome Powell failed to reassure investors that the central bank would keep surging bond yields and inflation expectations in check. Powell said the economic reopening could create some upward pressure on prices, reiterating that the central bank would be patient before changing policy, even as it saw inflation pick up in what it expects would be a transitory fashion. Translation: Papa Powell finally admitted we are in the midst of an inflation problem, that being the imminent massive devaluation of the dollar since the onset of COVID, which would cause the costs of goods and services to rise substantially. And to mitigate this certain fate, Powell threatened that there would be no more stimulus. What? No more money printer going brrr? What's supposed to keep the stock market artificially propped up? Because fundamentals went out the window a long time ago. Investors know it, so they bailed, causing the Dow to fall. Because why hold stock dividends from individual companies when Treasury bonds are lower risk and also, insanely enough, the 10-year Treasury yield is now higher than the S&P 500 dividend yield? Yeah, bearish. But there are some completely delusional bulls out there that think otherwise. In fact, our very own U.S. Treasury Secretary has some thoughts that rival Papa Powell's. Yellen says higher Treasury yields signal recovery, not inflation. On Friday, Yellen said higher long-term Treasury debt yields were a sign market participants were anticipating a stronger recovery, not of increased inflation concerns. I don't see that the markets are expecting inflation to rise above the 2% inflation objective that the Fed has as an average inflation rate over the long run. Oh, is that right? That's interesting, very interesting. And what makes this whole thing very interesting is, in her opinion, an inevitability, that being the hyperinflation of the dollar, is just simply not going to happen. I mean, I'm kind of about it. A touch of crazy keeps things very interesting. She added the United States needs faster job growth than seen during February, but can reach full employment by next year with President Joe Biden's $1.9 trillion stimulus plan in place. And wouldn't you know, just like that, Biden's $1.9 trillion stimulus bill is passed by U.S. Senate. Oh, hell yeah, giddy up. Y'all know what this means, right? Well, basically, stock market was down big this week, and the Senate approves a $1.9 trillion stimulus package over the weekend. The government has outlawed bear markets. Nice. But it also means the government just voted to devalue your currency and savings. But wait, Casey, the government outlawed bear markets. Hell yeah, giddy up, right? No, not for everyone. Senate just approved another $1.9 trillion to pump asset prices to the moon and push the bottom 45% of Americans with no investable assets further into despair. Bearish after all, for sure. But hey, let's do a Yellen special and flip the narrative in our favor. A $1.9 trillion advertisement for Bitcoin was just approved by the Senate. Yes, that's more like it. And during this wild crypto ride over the next few months, courtesy of the Fed's money printer, make sure you're taking profits along the way. And while holding your cryptocurrency for the long term, make sure you are transferring your crypto off of exchanges to hold in a cold storage hardware wallet. You can scroll down to the description area below to access the correct and official sites of my recommended hardware wallets. BC Vault is my personal favorite. Another option is the Ledger Nano Backup Pack, so scroll down and check them out. Or if you would rather make income from your idle digital assets you're planning to hold for the long term, you can safely earn interest with services provided by BlockFi. With a BlockFi interest account, your cryptocurrency can earn up to 8.6% APY. Interest accrues daily and is paid monthly. There are no hidden fees and no minimum balances. So if you're interested in learning more about BlockFi, you can get up to a $250 Bitcoin bonus when you use the link in the description area to sign up, all while supporting the channel. Because look guys, you need to be prepared. Buying Bitcoin under $100,000 is a steal. The US dollar won't last another 6 months. 6-month lifespan on the dollar? I don't know. But Bitcoin to over 100K this year? Yes, correct. In fact, if you believe that history repeats itself and we will see the massive inflation of the US dollar, just like what happened to the German mark in World War II, let's take a gander at Bitcoin's historical price movement following a halving event, which most recently occurred in May of 2020. This is a graph for people selling under 500K. Now of all times. Zoom out. Also, there are more halvings, the next in 2024, and a store of value, TAM, total addressable market, of $200 billion, and QE, MMT, NIRP, YCC, etc. It's an inflation storm out there, just saying. And taking a closer look at the chart, here we are 298 days after the third halving, sitting pretty at 47K. This light blue swath in the background represents the price growth range after previous halving events. This dark blue line within it represents the average price growth after previous halvings. If you follow the trend of this line depicting average price growth, based on historical data, we could see 100K per Bitcoin in mid-April of this year. By May, which would be a whole year after the halving, Bitcoin could soar to around $387,000 and finally consolidate back to around $286,000. So yes, as I've been saying in previous episodes, Bitcoin is hitting at least 100K this year, but more likely 250K plus. And I'm not the only one. Experts divided on BTC predictions, bullish or super bullish. From crypto advocates to former skeptics, pundits are outdoing themselves to predict ever higher prices for Bitcoin. On March 4th, senior commodity strategist for Bloomberg Intelligence, Mike McGlone, pointed to historical data to suggest that Bitcoin is on its way to $100,000. And Batman Bitcoin's Robin, Ethereum, is getting ready to make some moves as well. Major Ethereum gas fee overhaul EIP 1559 scheduled for July. Users and investors delight as EIP 1559 is scheduled for July. But ETH miners are less than thrilled. A hotly awaited upgrade to the Ethereum network that may result in ETH becoming a deflationary asset is now scheduled for the London hard fork in July. Nice. So basically with the implementation of EIP, or Ethereum Improvement Proposal number 1559, with every transaction on the Ethereum network, a portion of the fee will be burned. Meaning the more people that conduct transactions on the Ethereum network, the less ETH that will exist. So the supply of ETH will decrease versus increase. When more ETH is being burned than minted, ETH will become deflationary. And yes, this is great. However, Ethereum miners are displeased. Displeased in the same way airline pilots may be about drone technology potentially eliminating their ability to earn income. Same thing with the miners. But when the Ethereum network completely switches to proof of stake versus proof of work, miners won't be needed anymore anyways. The writing has been on the wall for a while. As Ethereum miners' displeasure increases, so does the value of NFTs. Native tokens of NFT projects are shooting up in value. The latest NFT boom is rubbing off on several blockchain projects, giving a huge boost to their native tokens. Tokens such as Chiliz, Decentraland, and Flow are skyrocketing today. All of these platforms have one thing in common. They're focused on non-fungible tokens. And if you don't know what NFTs or non-fungible tokens are, check out my video guide for beginners about them by clicking on the link above. And if you're interested in learning how to become a developer in the industry or learn more about the advanced technical concepts of blockchain technology, using the link in the description area, you can access Ivan on Tech's Academy at a discounted price. So scroll down and check it out. Sweet. And to wrap things up, let's touch on one of the crazier NFT fiascos in the market this week. Jack Dorsey, CEO of Twitter, is using Ethereum to auction off the first tweet ever made, which was simply, "Just setting up my Twitter." Bids were already coming in over $100,000. This could be Ethereum's most mainstreaming event ever. And it didn't stop at 100,000, not even close. Jack Dorsey is auctioning his first tweet ever as an NFT, and it's now worth over $2 million. And now over $2.5 million. All in all, I think the most important thing to understand right now is you should own some ETH. Not financial advice, life advice. Awesome. Well, that was Last Week Crypto with me, Crypto Casey. If you enjoyed the episode, please make sure to like this video and subscribe to my channel for more crypto content. To check out the links to all the articles we discussed, go to cryptocasey.com/lastweekcrypto. So how have you been faring in this sideways market this week? Are you prepared for when Bitcoin and Ether explode in the coming weeks? Or are you a bear in this bull market? Let me know in the comments below. Be safe out there.